Have you ever heard of the term asset allocation? Asset allocation is unbelievably important when it comes to trading and investing. Let me explain. At its very basic level, asset allocation essentially means which stocks or which bonds or which asset classes a portfolio manager or you at home are allocating money to. Studies have shown that 80% or more of any portfolio's returns, so profits or losses, can be attributed to asset allocation. So it's not so much which stocks do you buy, but which sectors of stocks you buy, or whether you allocate it to the stock market in general as opposed to the bond market. Most people spend way too much time looking at specific single name stocks as opposed to understanding that where they're really going to get their return from is by being allocated to the right parts of the stock market or the right parts of the bond market or being allocated to any of those markets at all. Now, you might be asking yourself, well, how do I do that? How do I find the right portfolio allocation, the right asset allocation? Well, that's a topic for another video, but I'm going to show you guys real quick how I do this at its very basic level so you can get a bit of an idea of what's involved and how you can do this as well. So to illustrate the importance of asset allocation, I created a very simple chart here. And basically we have two lines. We have the blue line, which in this case happens to represent technology stocks, and the red line, which in this case happens to represent energy stocks. You can see that over this point in time, starting at this point here, okay, if you would have made the decision to buy technology stocks, you would have made a 15+% return. If you would have made a decision to buy energy stocks, you would have lost about 20+% over that same time. The divergence or the spread between what these two groups of stocks have done is massive. So if someone had made the decision at this point in time to buy technology stocks and buy less of energy stocks, or in an extreme case, one would have bought technology stocks and sold or shorted energy stocks, that person would have made a crazy amount more money than the person who did the opposite, the person who would have bought energy stocks and sold technology stocks. Now, to illustrate this point a little bit further, think about the importance, the key point here in the asset allocation decision. It's not so much whether you bought Apple or you bought some other large cap technology stocks. It was the general thesis that you are going to buy large cap tech stocks and not so much the energy stocks. That simple decision, right? That simple decision would have explained basically all of the return in your portfolio. How do you cure this issue of staying out of the wrong sectors? Well, quite frankly, and again, this is part of a separate video I will do, it really has to do with respecting when a trend breaks. So if we now just go in and look at the sector that didn't work, that's the XLE. This line should be red. You can a lot of times in the market, if you just draw very simple lines, you can learn a lot. So in this case, if we simply would have taken and drawn a very simple line like this, at the very last resort, the point where you would have needed to get out of energy stocks, would have been this point here. Now that might sound overly simplistic, but from a sector and asset allocation perspective, that honestly is all you need to do. So again, the importance of asset allocation. Why is it important? Because according to studies and empirically, my experience as well, it explains 80+% of the returns in your portfolio, your trading and investing activities over time. I hope this was helpful, guys, and I'll see you in the next video.